Hi everyone, this is the 15th of January 2020. Now today morning I was supposed to do a CNBC interview, which I did, but it was delayed, and in case you missed it, the reason that happened is that there was Jeff Bezos on television, and definitely he gets much more eyeballs. But apart from that, there's something very interesting, and he went on to say, and it got everybody raving at that point of time. He made two announcements. One is that he would completely get into the MSME sector and is investing almost $1 billion into creating digital businesses for them over the next year or two. And then the next bigger one, he said that he's working towards a target of almost 10 billion worth of exports using the Amazon platform globally to make in India possible. So that was really a 10-year kind of target. Now, when you get those kind of announcements, and that's from a corporate, not just from the government, where it's like, MOUs being announced and you don't know how much will get delivered, but he's saying that they already have plans in that direction. It made a really, really interesting thought process for everyone in terms of where things are headed. Of course, we'll actually see how it goes, but it got everyone's attention. Now, what's really happened in the meantime was a day where the markets tried to correct a bit, and that's fair because you had a 5-day move consistently on the upside, and so one day pullback was completely natural. You've seen that in US indices itself. In fact, there the put call ratios are high compared to many previous highs that have occurred in the past, and so some people want to call a top purely on those PCR readings. But the daily sentiment index for the US index is still not very high. It's high. It's in the 80, I think around 84, 85%, but not really in the 90s. And every time it comes close to 90, it corrects a bit, and then again, the market continues to stretch higher. But what I would not rule out is a short-term blip, maybe a small correction, maybe to the 20-day average before it extends higher. And in that sense, that's what we got in the Indian market. The Bank Nifty fell a little more, retracing a little more than 38%, but finding support at the previous gap that it had left behind when it actually gapped up at the start of this move post the Iran attacks news fading. So similarly, Nifty had a much smaller correction, maybe around 23% retracement, just an hourly cycle back to the hourly lower bands, and then again prices started to extend higher. But if you just look at the indices for the day, the way the indices have actually moved is a lot of indices were in red midday when I was on air, and I mentioned there also that the 3 or 4 indices that were actually up meaningfully, one was the metals index. I've been saying about that every time, that's one of the best sectors that are likely to do well. It's been the best performing sector over the last quarter, still continues to edge higher on most days. And the second one is the real estate index. Now, I'm not sure what that is signaling, but definitely you're seeing a continued interest now in various beaten down sectors, whether it is power, whether it is real estate, infra companies, and so on. And that might have something to do with what I mentioned, I think, in the month of December, right after the RBI meet. I highlighted a part of that interview. Maybe I should do that now as well.
There is good coordination. So far it is going on. आप जो कह रहे हैं कि हम सरकार की तरफ देख रहे हैं और सरकार आरबीआई की तरफ देख रहा है, वैसा नहीं है बिल्कुल. बोथ आर कमिटेड टू रिवाइवल ऑफ ग्रोथ. मैंने यहाँ पे क्लियरली साफ तौर पे कहा है दैट द गवर्नमेंट एंड द आरबीआई विल कंटिन्यू टू वर्क इन ए कोऑर्डिनेटेड मैनर टू अचीव द नेशनल ऑब्जेक्टिव ऑफ रिवाइविंग ग्रोथ. इट्स ए नेशनल ऑब्जेक्टिव. ये आरबीआई का प्रॉब्लम नहीं है, ये सरकार का प्रॉब्लम नहीं, इट्स ए नेशनल इशू. सो देयरफॉर it is we are working in a coordinated manner. And जो बजट के बारे में आप जो बता रहे हैं कि जो अभी तक 102% फिस्कल डेफिसिट हो गया है, क्योंकि मेरे को इस एरिया में थोड़ा बहुत तजुर्बा है, तो यूसी देखिए हमेशा ये जो सेकेंड क्वार्टर और थर्ड क्वार्टर इस पीरियड में फिस्कल डेफिसिट हमेशा हाई रहता है, क्योंकि आपका जो रेवेन्यू इनफ्लो है इट इज वो पिकअप करता है. डायरेक्ट टैक्स पर्टिकुलरली वो पिकअप करता है Q4 में, और आपका बाकी टैक्स कलेक्शंस वो पिकअप करते हैं Q4 में. लेकिन आपका जो एक्सपेंडिचर है वो इवनली बैलेंस्ड रहता है थ्रू आउट द ईयर. तो देयरफॉर फर्स्ट 2 क्वार्टर्स में हमेशा फिस्कल डेफिसिट जो है हाई रहता है, और सेकेंड क्वार्टर में सिंस एक्सपेंडिचर इज इवनली स्प्रेड बट रेवेन्यू कलेक्शंस गो अप, फिस्कल डेफिसिट ऑटोमेटिकली comes down. In situations like this, it is for government to take a decisions. All that I said is that there is coordination between the RBI and government, but government, we will have greater clarity about the kind of new measures or the counter-cyclical measures that the government would announce. So which will give us a, more clarity with regard to the growth projections also.
The RBI governor essentially highlighted that there is need for something to happen on the fiscal front, and he said that government should mostly do something in that direction if they are really looking at getting the growth momentum and it's in the best interest of the country. I mean, that kind of statement I found very hard hitting at that point of time, because I haven't heard any governor say it, and it instantly raised the expectations of measures coming directly from the government and it's stepping into the fiscal side. Now, for everyone who's hearing now the changed commentary from economists who are all saying the same thing, that the government should use the fiscal space to help kickstart the economic cycle, many of whom would have not said the same thing a year ago. And what I was saying is, if they don't do that, you will not get the growth cycle back. And so that turned out to be true. And now that there's increasing pressure and willingness to move in that direction, it's actually the only way that this cycle can actually move on to the, or extend, or even inflate, whatever word you want to use, to the upside. And it's right in the Keynesian sense, because Keynes' economic theory was that you use expansionary policy during tough times and you use a tight policy during good times, and that's what they've actually done. If you look at the last 15 to 20 years, we've always talked about fiscal discipline and held on to our debt levels. We've actually helped them keep coming down. If you just simply go by the government's debt to equity, I don't go by the fiscal deficit number itself, which is nothing more than your ability to finance your debts, which is the interest payments. But I look at also the debt to GDP just of the government, which was at 90% under Vajpayee's time, and has come down over the years down to what is around 65% now. And there's a lot of room to really move it up if you want to. You can keep saying it's not good, but frankly, we are at much lower debt levels than many other countries as of today. And if you really want to move the economy to the upside, this is probably the only way out. Otherwise, you'll continue to deflate and correct, and then we would remain in a bear market. So I think the markets are anticipating something like that happens. So if it does not, then of course there is risk to the growth cycle that a lot of people don't know how it will really take off. But right now the market's in anticipatory note and running up into the budget. So you can call this a budget rally. And what's the good news of the day would be which are the other sectors that did well. It was the mid and small cap indices. End of the day, both are up by 1%. I have been putting out charts of these on my weekly updates and my daily updates and I've been mentioning that's the main sector that needs to break out and confirm the move in the markets. And that's what happened in the last 10 days. First, the mid cap 100, the Nifty mid cap 100, and then the Nifty small cap 100 also joined in. And I put that chart out 2 days ago. Both of them have broken past the falling trend line from the 2018 highs. Now, I got 2 comments on that on Twitter. One saying that, is it too late? And the other one saying that, well, if you drew the trend line differently, or if you do it to the previous highs, it had actually done that in 2017. Also, it broke past and then it fell again. Now, of course, the answer to that is you have to look at it from an Elliott wave sense. My sense then was that was a corrective X wave in 2017 and 18. So I was not really expecting that to be a proper breakout. This time, why am I thinking so? It's because, one, that it has taken a very long period of time, almost 18 months, equal to previous bear markets like the one from 2010 to 2013, almost 21 months or almost 2 years to put an approximation. And after that, when it broke out, you had a meaningful uptrend. So we haven't had longer than 2-year bear markets. And second is, the weekly RSIs then were probably at 40. Now they came close to 30. And so you were closer to the oversold zone than before. And so it was better taking the risky view that this is likely to turn around. And now we've seen higher tops and bottoms, and very slowly these indices have broken out and started to edge higher. So now you're getting broad-based participation. You can see it in the breadth. If you look at the AD ratio, you can see it in the indices themselves. And now that you have a broad-based rally, I think on days like this, essentially it's just, in fact, I think all of the last 5 to 6 days, it's been all about mid-cap indices going up 0.5%, 0.8%, 1% today. And so money is moving clearly into the secondary market rather than only the frontline stocks of the key indices. So that's a big change I think we've seen. And of course, like I said, this is most likely a budget rally that continues. Now, among other things that I continue to watch for is the US dollar. The US dollar has bounced back a bit. Will it start the next wave lower? It's a watching point, and I continue to look at key retracements, the previous swing highs which it's come very close to. And so we'll see whether it pauses there and starts heading down again. In the meantime, commodity prices have not moved up as fast as the commodity stocks, the metal stocks in India. And that's possibly because the dollar has been bouncing about. And so maybe they catch up later. There's always a lead lag between these things, because some people always anticipate and start moving into certain markets first. But we did get copper prices breaking to a new multi-week high. So it took out the 2-3 week ago high in the last 2 days, and that's a sense I think that the rally in probably at least copper has resumed. Last night and I think today morning we're also seeing some momentum coming back to aluminium and probably lead. I think lead has a triangle from which it has actually broken out. So these were interesting observations. So you're getting the move in metals on the way higher, but on the other hand, you have precious metals which had shot up on the fear news around Iran, which are actually correcting. The bigger issue with the precious metals, though, in the short term, is, though I consider this the usually seasonally bullish period, is that the long positions are as large as they were at the 2016 top in gold, and also as high as they were at the most recent high more than a month ago, after which prices kept consolidating into the December lows. So we have a near highest long position as far as traders are concerned in the gold market, which is why I keep getting concerned as to whether this run will go on, and also that 1620 is a 61.8% retracement of the entire previous bear market. So it's an important resistance level. But that said, in terms of just the Fibonacci fractal structure, this move would not have appeared complete. If I was not looking at positions, I would probably expect it to go higher than the 1620 mark, because the fifth wave has actually been shorter than the earlier waves. And so that is why all I'm looking for right now is a short-term correction in the precious metals. And if that turns out to be true, it will probably make one more higher bottom and continue higher. But because of the positioning, I'll let that correction happen just in case something goes wrong, and then judge accordingly. So you really need to judge what it does over the next couple of days, and that will give you an insight on the broader trend for the precious metals. So I think I'll end this update here for today. Thank you.